Like, really, though? How is it possible to have a thumbs down? I haven't even started yet. Like, at least let me suck first before you just blast off the thumbs down. I mean, I'm not great, but, like, yeah, let me at least start to suck first. Oh, my gosh. What a bad taste in my mouth. Let me go get some beer to wash this away. I'll be right back, guys. We'll be starting in just a minute. go. Let's do this. Let's do that. I got one more light to turn on, but I'm ready to rock. Hold on. I got one more light to turn on. It's right here. Stand by. Oh, there I am. There I am. There you guys are. How we doing, guys? Happy Sunday. Happy Sunday. 1 week off. It feels like forever since I've been here. Not really, though. We got about 11 voicemails tonight. I did have to look at them because 11 is a lot. And also, there's been some people trolling me on voicemails. Like, if you think leaving a voicemail where you just say penis like 100 times is going to bother me, I teach seniors. Just like, it more just makes me angry because I only get a certain amount of voicemails in a month. And if somebody keeps trolling me by leaving penis 100 times in a row, I lose out. So just, I don't know, text me and say penis or something. I got beers. First one requires a bottle opener. This is a 50 cal. We're going to start with good old Guinness tonight. Some of the voicemails are short. Some of them are longer. And this is, and like I said, how do I get a thumbs down? Let me suck first. Do you just see my name and like give a thumbs down? Like, why am I in your notification squad? They said in my Discord, maybe because I was so late. You know, I got that kid life. Sunday, fall, we had a good little day today. Went to the local brewery. The beer is, it was okay. Thank you, Luciano. Maybe I need to see the silver lining. If I'm getting trolls before I even start, that must be a good one. That must mean I made it. Speaking of making it, 717 subs, I think. It's kind of cool. If you haven't subbed, if you can sub, that'd be great. Once I get to 1,000, then I could start putting ads, making $20-$30 a month. That would be sweet. We got some questions. I asked my Discord for questions, not including options, so the people could stop commenting. You only talk about options now, Brad. So we got some non-options questions as well, and then our fair share of options questions. This week coming up, if you're in the Discord, you know I've been loving puts, selling a bunch of puts. The Robinhood portfolio now is at $32,000. I dropped 10 grand in 2 weeks ago. I dropped 10 grand in last week. I'll probably be dropping 10 grand in again this week. Reason for the price drops is with JJ and I going into contract on our real estate property. I kind of don't need to hold that much cash anymore because with my conservativeness and my debt to leverage, I will not be looking into another real estate property until I'm at least at like 50% equity to debt. So that's why I've been dumping money in. I didn't just like find a basket of money under. I've mentioned for a while now that I am heavy in cash for mostly real estate. So now that real estate's out of the bucket. What's up, Robin? How are you? So I think if there's no questions in the chat, we'll dive right into voicemails. Like I said, I listened to most of them. If you leave one now, I won't see it tonight. I'm going to be honest. That'll have to be for another time. Mostly because, like I said, I think we have like 10 to 12 voicemails to do tonight, which is freaking awesome. Like that's good news. Lieutenant Dan said we don't have to worry about money anymore. I said that's good. One less thing. So yeah, I don't even know why I said that. We're going to start with last week. And like I said, if you have any questions, please leave them in the chat. You guys are my number one priority over the voicemails. Also, too, in other great news, this weekend, I actually recorded some like real videos outside of the clips that I've been doing. The clips have been doing well. I kind of like that format. They've gotten some pretty good feedback. Nobody really hating on them. Actually answering real life questions that are going on. So it's not so instructional. It's more like in real time. How can we deal and things like that. So that's been really, really good. What's the books of the month? What do you mean by that? What am I reading right now? I just actually bought a book, if that's what you're asking. I just bought a book by Bo Miles called The Backyard Adventure. He's a YouTube channel that I freaking love a lot. So I bought his book. It just came out. So I bought that. That's currently what I'm reading right now. Books of the month. If that's what you meant by that. First one comes in from Josh. It is an options question and has to do with who the hell would sell a Leaps? Kind of an interesting question. I get it actually a lot. Like, we make all these rules. Let's just listen to the voicemail first, and then I'll get into it.
Hey, Brad. Question for you. Watched some of your videos on the Leaps options, the long calls. Really like that. The poor man's covered call. Just kind of curious, why would some donkey sell a Leaps? It sounds like such a win for the person buying the Leaps. What's the benefit for selling Leaps options? And should I consider potentially trying to do this in the future? Just kind of seems like all the benefits for the buyers, but we gotta have a seller on the other side, and I'm curious, what the benefit of selling a Leaps is. So, thanks.
So, like I just mentioned, a question that I get a lot. Like, first off, great usage of the word donkey. One of my favorite insults. Anytime you can call somebody a donkey and mean it, that is a good day for me. And to the buyer of an option, to the buyer of a Leaps option, the person that wrote that contract, it seems like a flat out donkey. And there's really no sexy answer to this. The reason that somebody would sell that option is, frankly, they feel strongly about the stock doing the opposite of what you think. They think in the next year or so, they think that stock is going to correct 20, 30%. And contrary to popular belief, there are a lot of people, value investors, who feel that the entire market is frankly just overvalued, stocks and options alike. So there's a lot of people out there that are like, I think this is going to go down. I really think this is going to go down. Is that the long and short of it? No. I think a lot of these are included in spreads and things like that, but I don't think that it's very uncommon if I think that, for example, I closed 2 Leaps options this week, and I think one of the voicemails is about closing them. I closed 2 this week for incredible returns. I'll keep that clickbait. You can check out the video to see exactly what I got. But when I bought those calls and thought that Waste Management was going to go up 20% in a year, there was definitely people out there that thought Waste Management was going to go down 20% the next year. So, I mean, that's the long and short of it. The people that buy them the people that sell them are just people that think that the stock is going to go down or not go up. The same as when we write calls, right? We write covered calls because we want them to expire worthless and we don't think that the share price is going to exceed our strike price by expiration. And they think the same. Now, with it like being deep in the money, quote unquote, you don't exactly know when that contract was written. It was probably still in the money. But how deep? You never know. You never know. They could have sat on a, leave open until expiration. Like, there could be limit orders or contracts that aren't closed at the end of the day. Those people put them in. And frankly, they just think that the option is going to go down. I hope that answers your question. It's not really that long. It's not really that drawn out. That's exactly the way I see it. And those are the people that are selling those options. So cheers to you. Cheers to Guinness. And thanks for the question. Honest Life, great question in the chat. How do you know how to calculate gain and loss of an option or Leaps before buying it? So I know what price the stock needs to hit so that I get 50% or 100% gain on my Leaps. Okay, and thanks for the love. So when you have you're going to have your strike price. Let's say it's $50, okay? And you are going to pay a premium of $750. or $7.50 per share. Your break even is going to be your strike price plus the premium that you paid, $57.50. $50 for the strike, $7.50 for the premium that you paid. So as long as your leap option goes above your strike plus the premium that you paid, that's where your break even is. Now, if you are going to go a little bit further and say sell some calls against that and do what we like to call the poor man's covered call, every single time you collect premium on that short call, you essentially can adjust your break even, adjust your net premium. So let's say, for example, the same $750 leaps, premiums are awesome, and you collect $100 on a short call. Now your net premium paid is really $6.50. Your new break even is $56.50. Now, as far as like profits and things like that, that's just a general percentage. Like if we're starting with a $700 premium that we paid, well, if it increases in value up to $1,400, you made a 100% return. I picked pretty crappy numbers for doing fractions. Let's say that it is, let's make our lives nice and easy. You paid $1,000 in premium. Well, if that goes up to $1,500, right, you just made 50% profit. So the profit is based upon the percentage increase on the premium that you paid, right? Because that's what we're going to be tracking. We're not tracking share price. We're tracking the value of that option, intrinsic value and extrinsic value coming together to make a premium value. So your break even, that's strike price and how much you paid. Your profit is going to be how much you paid, how that's going to vary. Thank you, A, for subscribing. In just a minute, you can contribute to the chat. And also, if you're watching on your phones, guys, I didn't know this for a long time. Next to the like and dislike button, there should be like a little chat box. So even if you're on your phone, you can still check out the chat and contribute. Luciano just telling people to leave the chat and go over to Investopedia. Come on, man. Are you the thumbs down? Troll. I'm just playing. I've had a good time today. I'm not going to lie. I might get a little loosey-goosey on this one. Without having to sell the stock. No, you just have to sell the stock. It's in the money, so you can get assigned at any time, right? If I buy a deep in the money call option, I can exercise that today, right? I mean, I'm going to set extrinsic value on fire, and that's going to be a terrible idea, but which I'm just busting your balls. But you know, that's you have to sell the stock essentially. If you sell a deep in the money call option, you're going to lose those 100 shares. I guess to think of it like that, let's say, for example, and this is back to the question that Josh had in the voicemail. Let's say, for example, you had 1,000 shares, 10 contracts at like a basis of $4 and a deep in the money call option at like $11 got you a crap ton of premium. And maybe you want to trim that position a little bit. Maybe you want to because then you would just sell the shares. I'm trying to think of anything other besides the fact that they just think that it's just going to go down. They don't think that your option is going to expire in the money. It's fact. That's as simple as it is. That's who the seller of options are. What's this say? I wear Winos from Zodi's? I don't know what that means. Tell me what that means. Should I register as a day trader? I don't know what that means either. I know what a day trader is, but I don't know what it means to register as a day trader. I've never been a day trader, so maybe that's just something I don't know. Matt Barr, thank you so much for subscribing, bud. In just 1 minute, you will be allowed to enter the chat. I generally only invest and just wrote my first covered call this week. Are there any negatives to registering as a day trader? I don't know what that means to register as a day trader. I know that on like things like I use, like my little petty things like Robinhood, you're allowed 5 before they ban you or they block you for a little bit unless you have 25K invested. I think the same is for Webull. Once you have 25K invested, you could start day trading. I don't know what it means to register as a day trader. Maybe you can follow up and let me know. I'll get to the next voicemail because I know it's quick. It's actually It's about Tesla, but can be applied to really any stock.
Hey, Brad. My name is Sid, and my question is about Tesla. So, if you look at the weekly Tesla options contracts chain, you see that they actually offer good premiums up to 25% out of the current stock price. So, I guess my question is, do you think that it's a good idea to do a CSP on Tesla as our only trade as opposed to diversifying our capital? Also, based on the fact that Tesla has never actually dropped 25% in 5 days till date. Now, even if we were to get assigned, we'd own Tesla at a 25% discount. So I was just wondering about your thoughts on this topic. Thanks.
All right, so here we go. First off, I'm not a financial advisor, so I don't really care what you do. I'm going to be talking, and everything that I'm about to say is going to be in terms of what I would do in this position. I'm not telling you what to do. I'm not even telling good or bad. Even if I sound like it's good or bad, I do not care. I'm blown up over here. Okay. Sorry. When the wife calls, you listen. I have no problem selling options in Tesla. I know the premiums are awesome. It is a lot of freaking money. So that's first. A lot of freaking money. If you have the money, I say, why not? If you feel strongly about it, just like you'd feel strongly about any options, go for it. Awesome. I don't like putting, quote, all my money into one trade as opposed to diversifying my money. I like to diversify my money and not over leverage any one position. There's that. As far as it's never dropped 25% in its history, if you go to the roulette wheel and it runs black 25 times in a row, that does not mean that it's more likely or less likely to hit black on the next one, right? History doesn't exactly, it can paint a good picture, but just because it's never been 25% down in one day or 1 week or whatever you said doesn't mean it can't do it again. So I really wouldn't use that statistic when making my options decisions. And last, you'd be getting it at a 25 discount. You'd be getting it at a 25% discount from what it is currently. That doesn't mean that you're getting a 25% discount on Tesla's fair value. Now, I'm not opposed to Tesla. I love the cars. I love the company, but I am one of those people that will not buy them because I think that they are ridiculously overvalued. I think that this is Intel a bunch of years back. I think this is when Intel was blowing up and you're like, there's no way that they can increase revenues and they can keep building and buy back shares and be down 50% from today. I'm not saying Tesla's going to do that. I can't predict the future, but I do know that for statistically speaking and how we evaluate fair market, they're very, very overvalued. So just because it's on sale doesn't mean you need to buy it. I say that to my wife all the time. And I frankly think that the thing can go down 25% and still be pretty overvalued. So if you want to go for it, go for it. Do it. If it's going to tie up all your money, risky. If you're going to go on a statistic like it's never dropped that much, risky. If you're going to think just because it's at a 25% discount from today's value, that's a good price, risky. For my blood, just sounds like a lot of risk. A lot of risk. A says in the chat, here we are. Hey, Brad, I made 6.9% last week running the wheel. Let's go. That's awesome. I also use margin to get more percentage in a week. Yee! See, this is first they're sour, then they're sweet. No, first they're sweet, then they're sour. Okay. Do you ever play more aggressive with the wheel? What's your goal percentage to make in a week per month? So I just did a video on the main channel, which I believe was a clip. So this is a question I get asked all the time. And it was like the returns that people can get. When I'm aggressive with the wheel, that means I trade at the money. That's about as aggressive as I'll be. I don't trade, below or above my basis, depending on if it's a call or a put. I like to try and I look more at annual return on investment than weekly or monthly return on investment. I mentioned in that video that, just on the wheel, it's hard to get like 10%. I've done it for a couple of months, but over the course of a year, very, very hard to do. I think even your 6.9 is still, it's pretty good. Like if you told me I was going to get 6.9, 7% every single week for the whole year, I mean, realistically, if I get over 12% on my money for any investment over the course of a year, I'm going to be flat out ecstatic. So I definitely more look at annual return on investment. And it's hard for me to figure out my annual return on investment trading options now that I've diversified amongst many different types of options and many different types of options plays, to be honest. So if I am going to be aggressive, yeah, I'm aggressive when I trade at the money. And I guess if I had to put a goal on it without sounding cliche, I try and get like between 5 and 6% net every single month for the annual return. But I definitely look for those dope months where, I'll pull a 12 to 15%. But realistically, I know that's going to be offset by a 3 to 4% month. So try and think a little bit more long-term, a little bit more annual return on investment. And I think that will decrease stress and just make your life a little bit easier. Hope that answered your question, bud. Honest Life coming in with taxes question. I love taxes questions because I love dominating taxes. How do you calculate taxes? If you make $1,000 profit on a short trade, are you taking $500 out when taxes come? How do you make sure you have enough to pay them? So one way I make sure that I have enough money to pay my taxes is I pay my taxes quarterly. I pay estimated taxes quarterly. And yeah, I keep really, really, really good records. I just make sure, and they don't have to be like exact because with my income varying and changing, I really don't know what my marginal tax rate is going to be at the end of the year. Like I know my state tax, that's pretty easy for me to get. But also like, yeah, how do I like know that I'll have enough for them? I take money aside and I estimate my taxes at quarterly because I know that if I waited to the end of the year, that might be a really big nut to have to swallow. So I pretty much just say, hey, if I get a quarterly, it's not going to be too much where I can't recover from that or at least liquidate some of my assets to pay taxes. And then just over time, you just kind of understand. I don't think it's far-fetched or even ridiculous for somebody that doesn't pay quarterly taxes to say, all right, once a month or at least once a quarter, I'm going to look at all of my income and I'm going to try and figure out what my taxes are and put it into a sinking fund. Before my business became a corporation, when I was just a sole proprietor, I would do that. I would have a spreadsheet of affiliate marketing, tutoring, at Google AdSense, and every single month I would look and see, okay, Google just paid me this, an affiliate marketer just paid me this, and I would shoot it. I think to save myself like the stress, I just came up with an arbitrary number of 40% or maybe 35 to 40%. And I would just shoot 35 to 40% into a sinking fund every single month. Now, like I said, with more income and being more tax efficient, I tend to do it quarterly and just pay my taxes. Doing it on a trade to trade basis is going to be really, really annoying because right, it's the big picture. You don't pay taxes per trade. You don't pay taxes per premium. You pay taxes on your net, on the net. So you're going to have some losses. You're going to have some wins. You might even take some losses in some stocks if you want to start to tax loss harvest and things like that. But I think the long and the short is I don't take them out per trade. I definitely keep track of the premiums that I collect. I mean, it started as a hobby just for YouTube videos, but then I realized that it was really, really good. And because my income is so high and because I pay so much money in taxes, I make sure that I at least pay some quarterly taxes every single month. I think my CPA and I use the marginal tax rate from my previous year, so that at least I'm covered from what my income was last year. And then at the fourth quarter, I might have to adjust. And my fourth quarter is probably going to be a little bit higher. Right. And I'm also have switched my mindset now that I understand money, business, and taxes, that a tax refund is a terrible, terrible, terrible thing. And if you are getting excited about it, it doesn't make you bad money. It doesn't make you an idiot. It just means that you're a little uneducated on why you're getting a tax refund and why that's a bad thing. So my goal is to break even or have to pay. If I get a tax refund, that means the government made interest off of my money when I should have been the one doing it. So you don't give the government money to make money and then at the end of the year say, hey, can I have my money back now? And they're like, oh yeah, here it is. Sorry about that. Thanks for all that money that you helped me make. Right? Like, what's the average? When I was a kid, I was getting refund checks of like $1,000. I thought I was like king of the world. Think about how many Americans there are and like how many of them get refunds, or how many of your friends are stoked on refunds, and how much the government's making on interest. It blows my mind. So, I mean, that was a little side tangent rant about taxes and things like that. But I love them. Thank you so much. Zodies is an old... oh, okay. Right on. Right on, Zodies. Jeff said serious because I had to take notes. I took notes. Took notes. Oh, my gosh. I'm just reading through the chats, guys. Before I get to a voicemail, I want to make sure I answer all the chat questions. What are the best tax write-offs for a day trader? There aren't any. If you're going to day trade, you're going to get kicked in the throat in taxes. Simple as that. But, I mean, if you think about like the day trading, let's see. Day trading, ton of stress, ton of work, low probability of profit, completely tax inefficient, hard to keep girlfriends, but you might get rich. Or live your best life and have to wait 40 years to be rich. Unfortunately, for day traders that want advice on day trading, I'm the latter. Oh, you don't need to register with the IRS as a day trader, I don't believe. They don't care as long as you pay them their money. Diego, what's up, bud? Let me get to your question here. Started selling options in August, made about 20K, loving it. Then lost about 20K in September. That's awesome. That's called learning. Closed them all out so I wouldn't keep losing. Would you wait? Let them go back? So there's like this, and I put it on Instagram the other day, feedback loops. I'm a huge feedback loop person from the engineering side of me, that like life is simple. It's like, try something, right? Try anything. Did you succeed? Yes. Success. No. Learn a lesson. Try again. Go back. Did you succeed? Yes. Success. No. Learn lesson. Try again. So you'd have to, Diego, look at how did you make 20K? Did you get lucky? Sometimes it's better to be lucky than good. Or did you follow a core set of values and fundamentals and you had a good run? Then you have to establish why you lost 20K. Did you get greedy? Did you get reckless? Did you get lucky making the 20K and now your luck ran out? These are all things that you would need to know before I can answer that question. Right? For me, in my experience, when I lose, it's generally due to greed or alcohol, or a combination of both, which is a perfect storm. Luckily, the markets are open early in the morning and I don't start drinking until noon. So most of the time I can get away with it. But yeah, no, if you lost 20, if I got 20K and then I lost 20K, I would have to first establish how that happened before I worried about doing anything else. Sometimes you just lose 20K. Investments have risk. Options have risk. Sometimes your Roth IRA is going to go down 20K. Your 401k is going to go down 20K. But the reason is because the markets are down. Okay, dope. Let's keep putting money in because eventually it's going to go up. Right? If you just ran into a little bit of bad luck, should keep going, man. Would you wait or let them go back up while getting no premiums? That's really up to you. It depends on how you lost the 20K. Start fresh. Well, if you're at zero, you start fresh regardless, right? Azavito's here. What's up, Aaron? Aaron, I haven't got to your question yet, so you're good. You didn't miss anything. Alberto, thanks for subscribing to the channel, bud. The chat will be open to you in just 1 minute. How is the options chain last price determined? The price that it's selling for, the market price that it sells for. I mean, who determines the high and the low options chain? So I made a video about this. If you go to my main channel and look bid-ask spread, Brad Finn, bid-ask spread, that video goes through how the market makers determine the bid-ask spread, the market price, the last price, the limit price, every price. So that would probably be the best place to go. If you really, really want to understand the bid-ask spread, it's good to know. But Brad Finn, bid-ask spread, is that this one? I think it's that thumbnail. I need some new ones, new thumbnails. Sorry, I'm just reading through the chat, guys. I'll get to you in a second. Oh, this is a great. In the UK, we have no difference between long and short-term capital gains. Would that change your trading style if that was the case in the US? No, it would not. I don't make money with the fear of taxes. I just don't. I don't. So if, like, say, for example, the difference between long-term and short-term is 6%, 22 on 15. If you were like, Brad, you're going to make $100, but I'm going to have to keep 80 of it. Or you're like, Brad, you're going to make $100, but I got to keep, or hold on, let me change. If you said to me, Brad, you're going to make $100, but you're only allowed to keep 80 of it. Or Brad, you're going to make $100, but you're only allowed to keep 70 of it. I don't care. I still win. Taxes are taxes. They're not going away. Ever. So no, personally, that would not change my strategy at all. Steven, hey, what's up? Thank you, Jess. I appreciate it. Good luck with your options career. CB, I'm getting to, you're at the bottom though. You're here though, so maybe I'll play yours next. I'm getting to them all. A lot of them are like pretty short, and some of them are getting like repetitive, and I'm not going to make the people that come and hang out with me every single Sunday like listen to the same shit over and over again. So I might just reference future videos, you know what I'm saying? What do you think about Tesla tomorrow? I haven't even thought about it, and I won't. Tesla's not on my watch list. It's not something I care about. Until I see something in the news that says Tesla share price has dropped 60%, all I'll be thinking about is possibly one day buying one of their cars. That's how I feel about Tesla tomorrow. Unless you have 100K and no TA, what's the point of day trading? I mean, people do it with way less than 100K. Way less. Way less. Some people like it for the rush and the hobby. Same reason I trade options. I know some people that day trade just for the fun of it. They're just like, I like it. It's like their poker money or their drinking money. They're just like, hey, I'm gonna try and trade, and that's gonna be that. Yeah, Chris, if you end up having to leave, let me know and I'll answer your question. I always have my eye on potential leaps and poor man's covered calls, Sean Boy Finance, every single day. That's what we talk about inside my Discord. If you say so, Steven. Steven feels very, very strongly about Tesla. And apparently he loves Lucid. The guys from Everything Money hate both Lucid and Tesla. So this is a great opportunity to say some people feel very differently about different things. This actually is a good question. If you're an options trader, you've probably at least thought this at some time in your career. So let's do this question quick. It's good.
Hey, Brad. Thank you for what you do, and I'm really getting a lot of knowledge over last 6 7 months following your different YouTube educational channel. My one of the thing I'm hurdling about is putting the covered call, um, and I want to do wheel strategy, but the difficulty is my average buying price, average cost of the stock is much higher than the current market price, and therefore to put a covered call in a shorter option date, I'm having a hard time to set my strike price to make some money. Now, my question is, do you consider when you are doing the wheel strategy, do you consider setting up much lower strike price than your average price of the stock, just for taking?
Okay, so if you guys didn't catch that, pretty much saying he's bag holding, right? He has his cost basis is, let's say, $75 and it's currently trading at 50. So if he wants to go by rule number 1 of covered calls and not write that call below his basis, he's getting no premium. We've all been there. You've been trading options for longer than 6 months. You're doing the wheel for more than 6 months. This has probably happened to you. And the simple answer for me is you have like 3 options. You can wait for the share price to go up. Okay, I had to do that with Wells Fargo. You can go further out in expiration to find that premium above your basis. The further you go out in expiration, the more likelihood you'll get a little bit of premium. Or you can roll the dice and you can write calls at maybe like 0.1 or 0.15 delta and hope everything works out. And I also did that with Wells Fargo. And in most cases where I was a little risky, maybe not Wells Fargo, I ended up, I think, winning with Wells Fargo, but it never ends up well. If it were me, once again, this is not financial advice. If it were me, I would either bag hold it and wait, or I'd go for an expiration. Or I would say I chose a stock that I probably shouldn't have chose because I was just learning options. So, maybe I'll just sell at my loss, mitigate some loss, and move that money into a different stock now that I have some education and I'm ready to, make some money and not wait for that thing. Like if it's Nikola Motors, like don't wait for that to go back up. It's never, well, a high statistic, a high probability rate shows that Nikola is not going to go up. But if it's something like dipped because of COVID or something like that, and you think it's going to go up a little bit, or if it's Baba and everyone still thinks Baba's the best stock to buy right now, maybe you want to bag hold Baba for a little bit. I don't know. Currently there in Starbucks, really? Did they really drop that much, Starbucks, Jeff? What's your basis at? I've been doing really, really well with Starbucks. Maybe I just got in at the right time. I know, Azevedo, I had to say Baba for you. Baba. Speaking of Aaron Azevedo, this is how you know somebody asks, how do you get the wrench? You get the wrench because you're just a good guy. When I post in the Discord, can somebody leave me a question that does not have any options to help me out and help my YouTube channel out? 5 minutes later, I got a question from Aaron Azevedo that wasn't options related. He's just the GOAT. Thank you, Aaron. Here's your question. And it's a good one too, by the way.
Hey, Brad, it's Aaron.
I know how smart you are though. I got to ask, and you can leave this in the chat. I'm going to restart this in a second because this one's going to go to the main channel because it's a good one. Did you already know the answer to this? You just want to hear my opinion, or did you really, really actually want to hear my opinion on this? I'm very curious because I know you're a smart guy, and I'm just not sure if you're humoring me or not. I don't know. Here's Aaron's question.
Hey, Brad, it's Aaron. I have a pretty large traditional IRA that was originally a rollover from a 401k from a previous job. And over time, the traditional IRA has grown pretty large. But I would like to do is roll some of that over and convert it to a Roth. And I'm just wondering if you have any like rules of thumb for rolling over from a traditional to a Roth and what some of the tax implications may be of doing that. Appreciate the content. Keep it up, bud. See ya.
All right. So the differences between traditional and Roth. Real quick, I'll give like a little rundown of both. The Roth IRA, an amazing account. I've done many videos. I wish I could go back and make some more of them. Maybe one day when I get to 100,000 subscribers, I will. Can't do it right now necessarily because every time I post a video that's not options, I lose 50 subscribers. And I need that vanity 100K so I can put the silver play button right here. Once we get to 100K, I can go back to making Roth IRA videos. The traditional IRA is for somebody that really doesn't have access to a 401k because you can treat it as tax deferred. So you can treat a traditional IRA like a 401k, 403b, 457. Money can go in tax deferred. Later on in life, you are going to have to pay taxes when that comes out. Where the Roth is the opposite. You put money in first. You put post-tax money in. You're allowed to do this as long as you have earned income. And that is going to grow tax-free for life. All right? If all things stay the same. Now, couple things with rolling the traditional into the Roth. Number one, and here's something that people get caught up on. They know that they have to pay taxes because the money's in their tax deferred. But what they don't know is that you can't use that rolled money to pay taxes. So for example, like if you were going to roll 10 grand, you're like, all right, I'm going to owe like 2 grand in taxes. I'll just roll 8. That you can't do that, okay? Because you're rolling it into a Roth IRA, which you can't touch till you're 59 and a half. So you can't access that money without penalty to pay the taxes. So if you are going to roll, make sure that you have the money at the end of the year to pay taxes on whatever you roll. Like that's going to be one thing you have to think about. The next thing you need to think about is unlike contributions, conversions, things you roll, cannot be touched for 5 years. So if you are maybe closer to 59 and a half and you are going to move that money and you plan on or need that money, you're like, all right, I'm 57 years old. I'm going to roll that over and I'll grab that in 3 years when I turn 59 and a half. You are not going to be able to do that. Contributions you can take after you're 59 and a half, even if you put it in after 59 and a half. But rollovers or things like that, they have to wait in there 5 years. So depending on your age, you definitely have to think about that. Another reason that I don't want to keep money in my traditional IRA is because of the pro rata rule. And frankly, this current administration, if you have money in your traditional IRA, that is going to eliminate the backdoor Roth option for you. Okay, and you can Google the pro rata if you really need to understand that. It's essentially you're going to get taxed twice, right? Because when we want to do a backdoor Roth, we want to put money into the additional just for a day and then put it and convert it into a Roth. But the pro rata, if you put money in, you're going to have to pay taxes. It's a video all in itself. So that's another reason why. Excuse me. That's another reason why I don't want money in my traditional, because I am over the income limit and I know that I want to use the backdoor Roth until Biden tells me I'm not allowed to anymore. So, but maybe you don't have to worry about the backdoor Roth. Maybe you can go right into the Roth IRA. So that really doesn't really bother you that much. The last other reason why I would transfer it out of the traditional is because there's no RMDs inside the Roth. So if you have a traditional IRA, which you said has a large sum of money in it, one day you are going to take RMDs on that, required minimum distributions, where that will not be the case in the Roth IRA. I don't have any money in my traditional because I have those 403Bs and 401Ks and things like that. But I'll tell you this, as soon as I can, I'm going to start moving that money right into the Roth and do the Roth conversion ladder and know that, the first one I put in is going to have to wait 5 years. And then I'll just have this ladder of money that's just going to grow tax-free. So depending on what that large sum of money is, like if there's $100K in there, you don't want to roll all that because then you have to come up with the money to pay taxes. But I would definitely think about, what age you plan on retiring. And I frankly, especially if you have a 401k or something like that, you said this was from rollovers. If you have your own 401k that you're currently building right now, I'm going to try and get that traditional IRA to zero. I'm going to pay taxes on it. Taxes are pretty high. They might go up, they might go down. That's one thing to consider. Like if you're getting close to retirement and your taxes and your income's going to be low and you're like, I'm going to be able to roll these at a really, really low tax rate, maybe you want to wait a couple of years. But the two things I really see people get caught up on when they move it is, one, they think that they can use the traditional IRA to pay the taxes they're going to owe on that rollover, and they don't consider the 5-year rule. I personally don't want any money in the traditional IRA for the reasons I said. Like the RMDs, I want to be able to use the backdoor Roth until Joe Biden or another Democrat tells me that I can't. And I love tax-free growth. And I think the money that I'm going to pay taxes on now, I hope to live to, I mean, what did Ricky Bobby say? With my high income and advances in technology, I don't see any reason why I'm not going to live till at least 450 years old. So I'm going to want to pay those taxes now and take the L now and then have all of that grow till later in life. Let me know what you're going to do. We talk all the time. I'm curious. Thanks for the question. That wasn't options. Oh, you got IV, huh, Jeff? There's an IV question here. It's coming up in a minute. CB, it's no big deal. Non-option questions are good. We need a foundation. Mention these retirement accounts. I love talking retirement accounts. Can I do anything with your pension? I don't know what you mean by that. Like you're getting your pension already? Or you want to roll your pension into a Roth? Like that's, no, you can't do that because unlike, this is a common misconception about Roths, and Robinson has an awesome Roth question, so I'm going to dive deeper into this. So to contribute to the Roth, you need to have earned income, okay? But Social Security and pensions do not count as earned income for the Roth IRA. So you can't use that. If that's your only income, your pension, you can't put that money into a Roth IRA. That's illegal. I'm not sure what you meant by that. But please, please, please ask all of the non-options questions that you want. Shake and bake. I'm glad somebody at least did he say, I don't think he said 400. What did he say? Like 106 years old? Yeah, if you're 35, yeah, you kind of got to wait till you retire. Yeah. I mean, before in New York State, before you're vested, like for me, I have mandatory. I don't know. I wouldn't call it mandatory. I have to put money in. I 6% of my salary goes in. Before I'm vested, I was allowed to take it out. I'm vested now, but then right now I have a reduction up to age 63. Awesome. So when I leave teaching this year, I'll have to, quote, resign. And then until I turn 63, I'll be looking for another teaching job so that I can collect 100% of my pension when I turn 63. What's the magic number? Tell me more. How much money do I need saved to run the wheel strategy full-time as a job? Your magic number is how much money do you need to live? You need $20 to live? Your wheel career is going to start today. If you need $50,000 to live, you're probably going to have to work a little bit longer. I don't know anybody that's trading the wheel. That's too much stress. I literally put more effort into trading the wheel than I do my W-2 job. Like if somebody came to me today and put a Sig Sauer 226 in my face and was like, choose, you have to live off of options or you got to teach for the rest of your life, I'll never trade the wheel ever again. And frankly, the day I retire from teaching, I don't know if I'm going to trade options anymore because I'm just doing this for sport. And I love it. I'll probably keep doing it for a hobby. after I'm done like sitting on a beach for the whole day. Maybe I'll trade options like 2 months a year just to like scratch the itch. But trade as a full-time job? Nope. Jeffrey, running joke. I say that every year. I don't think this is going to be my last year. 2 more years. I want to walk my daughter to school. She's 4. She'll be 4 in January. So she's in preschool. So she's got pre-K and then K and then first. I don't know. I'm walking my kids to school. My father did that to me. It was one of his last dying wishes that he would live long enough to walk one of his grandchildren to school. He did not get to take advantage of that. So I'm going to, I think, I don't know where I said this on the Average Money podcast on Wednesday. I said, when my daughter's in first grade, the conversation I'm going to have with my department chair is this. Hi, how are you today? I just want to let you know next school year, I'm going to need first and second period off so I can walk my daughter to school. And if you don't think that that's going to be something that we can take care of, then I'm going to need you to replace my position next year. What do they call that? FU money? So I say this year. Maybe. Hey, maybe the podcast blows up and just gets lit. And I can be like, I'm out of here. Never leave in the beginning of the year, though. I love my students too much. I would never leave in the middle of the year. That's like effed up. I'd at least wait till the end. Chris said we're never going to get through all these voicemails. I'm just cruising right now. On to the next one. Another loyal, amazing, incredible Discord member and Brad Finn supporter coming in with the non-options question. Bless you, Robin. Another amazing question. And Robin, this is a question that really no one has ever asked me before. I've mentioned it briefly in videos, but in all of my 1,000 consulting calls and coaching calls I've done, I've never had this question. I'm going to answer it to the best of my ability and maybe give you a couple things that you can go research.
Hey, Brad, this is Robin. Have a retirement account question for you. I'm 51 this month. My husband, James, is 57. We both have Roth IRA accounts with a little bit in them. We have not been really contributing to them because we have some debt that we're working on, about $9,000 between a car loan and 2 credit cards. We'll get that taken care of in the next year or so. But in the meantime, my question is, with my husband being 57, does it make sense once we're ready to start contributing to these accounts to put money into a Roth IRA for him? Or is there something else that we should be putting money away for his benefit towards retirement as far as tax advantaged that is equivalent to a Roth IRA, or should we just put it into a regular brokerage account? Thanks. Bye.
Okay, so first and foremost, you said that you had them open, which is a good thing. If you are somebody that's a little bit older, one thing you have to understand is that the Roth IRA has to be open for 5 years before you could take advantage of its tax benefits. So if you were 59 and a half or 57, that's okay. You would have to understand that at 57, you wouldn't be able to touch that money with its tax benefits until you're 62. That's one thing that you need to think about. The next thing you need to think about is as you get older to contribute to a Roth IRA, you have to have earned income that cannot be your pension and it cannot be Social Security. So if he's 57 and he's working, great, awesome. And I think that this wasn't really a conversation I had. I know you said it because we're all youngsters, but I think a real reason is not a lot of older people. A lot of older people have either never invested or they had their financial guy that's been charging them out the ass with fees to run their actively managed funds. And like, not many older people in that generation, I mean, I'll be 40, but I mean, maybe 45 and above, not many people utilize the Roth IRA because no financial advisor that's making money off of you is going to recommend it. So it just never came up in conversation. Now, with people living longer, working longer, and having more financial education, I think more older people are just frankly finding out about the Roth now, and that's a great thing. I guess to answer your question short, and then I'll give a couple like reasons why I feel this way. I am for, if you are still making income and you have other liquid assets, I'm totally for using the Roth IRA. I love that you mentioned debt. To be honest, I might sprinkle some in there unless some of your debt is at an insane interest rate. We've spoken before. You kind of know what I feel is like insane. Like 10% is like yikes. 15% is like holy hell. Above 20% is like your hair's on fire. Let's figure this thing out immediately before we even think about anything. All right. The other things that are wonderful are the no random required minimum distributions that are going to come through a 401k or traditional Roth IRA. So that's going to be wonderful. The next thing that older people that they need to consider, and another great, amazing thing in the Roth IRA, and it's frankly something at 40 is the main reason that I contribute to it. And I talk to people my age that are just like not into the Roth IRA. And I think there's some people even in here, I'm not throwing anybody under the bus, but like that are just like, Brad, I'm just really not into the Roth IRA. The fact that you can pass down a Roth IRA to a spouse and that money goes right into their Roth IRA and continues to grow tax-free is incredible. Like, let's say, for example, your husband right now, he's 57. He lives to 100, okay? So, and he always has some earned income outside his pension. You guys start a little side gig, and he's able to put in $1,000 a month between now, $1,000 even a year between now and the time he's 100 years old. And you're going to live to 110, obviously, because you need to outlive him. Well, when he dies at 100, you're going to get his entire Roth IRA, all of its growth that's now tax-free growth, and it's going to go right into your Roth IRA like it's your own with no minimum required distributions. Now, that's for a spouse. If you have children and you had to pass it down to a child, they get that money the same as a spouse, but they will get required minimum distributions. So a spouse, no distributions. So let's say somebody has a husband that's 57 and they're 50 and they have a 12-year-old. You're going to have your husband max that thing out to the best of his ability. You can now, because you're older, you can contribute an extra $1,000 on top of the minimum. He passes away. You take all that money, goes into yours. Now, yours was already dope because you were maxing his out and maxing yours out. Now you live for another 20 years, you pass away. All of that money is going to go to your kid, tax-free. Now they are going to have to take minimum distributions on it when they get to a certain age. But for me, I love the Roth for that reason as well if you're older. Sometimes when we get older, and this sounds a little bit like maybe a little bit morbid and a little bit crazy, or like people don't want to talk about it. Sometimes if you're getting a little bit older, you're making good financial decisions, not for you anymore, right? You're more thinking about how am I going to take care of people under me. I'll give you a good example. My dad, when he found out he had terminal cancer, he started fixing up the house. My dad, why the F did you just put a $15,000 central air conditioner system in a house that you lived in for 25 years and you went through the bullshit of window units your whole life? Why now, when you find out you're terminally ill and you are going to die in the next 6 months, that you decide that you are going to put central air in the house? His answer it's like, he said, for you guys. I'm like, what do you mean? He's like, I can't take this money to my grave And you guys like to rage. If I just gave you money, you'd probably rage. So I figure, why not make the house really, really nice for when I go, you guys can have a really, really nice house. So there might be that component if you're getting a little bit older. I'm speaking to Robin, but I'm really speaking to everybody. You might be like, I'm going to start putting some money in and start putting some money aside so that when I die, I have this awesome tax-free vehicle to pass down to my kids. Okay? So the long and short, Robin, I personally would. I'd get rid of the debt. And if you had money going into some places, that's fine. I don't think you're doing yourself a disservice by sprinkling any money into that Roth IRA. I really don't. I really don't. Now, if he's 57 and you're 51 and you got no kids and there's really no one to inherit it down to, maybe in your will you have all that money being donated or something. You know, I'm sure you have a family member, uncle, aunt, niece, somebody that money that can go to. And maybe if one of you goes and then you can start spending it whatever you want. But I don't know a con of doing that. If it's been open for 5 years, so you can take advantage of its growth, you have earned income, so you're legally allowed to contribute, and you're going to be over 59 and a half, so you could take that money back tax-free whenever you need to, and you could put any investment in, you could buy stocks and put stocks into it, just like a taxable brokerage account. I don't see a reason why you wouldn't do it. I don't think you could be too old. Now, if you're like 60 and you haven't even opened one, and now you're talking about putting money in to wait till you're 65, I might just say at that point, F it. Let's just open a taxable brokerage account, get some money in there that you could live off. At that point, if you're just starting to invest at 60, 65, that's an example where you're going to be thinking about your kids and your grandkids and whatnot and what you're going to do there. But I don't think you could be too old. The only way you can be too old to invest in a Roth IRA is if you no longer have earned income and you legally are not allowed to contribute to it. So I hope that answered your question, Robin. Awesome. Both working full time, plus he has his pension. Yeah, so as long as you have that earned income, then throw it in there. I have the third kind of percentage, the wrong kind of fire. The debt. Oh man, Robin, I hate that you have that debt. Luciano says, great question. It really these are non-options questions that we have to think about from time to time. I love this question. I'm sorry if I pronounce your name wrong. Maybe you can phonetically show. Is it Callum or Column? Or maybe it's not even Callum or Column. But do you think it's better to put money aside separately for your children or to focus on building personal wealth and then pass it on to them? The latter. And JJ and I, we have talked about this on the Average Money Podcast. For any of you that don't know what the Average Money Podcast is, my good buddy JJ Buckner, 159,000 subscribers here on YouTube. We have a podcast which we stream live every single Wednesday. And then about a month and a half later, that comes out to all our streaming services. We've talked about how frustrating it is when we hear people talk about saving money for kids' college and such like that, and they don't even have their ducks in a row. That's like the mask coming down and you putting the mask on your child on the plane instead of putting the mask on yours, securely tightening and then helping a child, right? You need to make sure your ducks in a row. If you're not happy, healthy, and financially well, your kids are never going to be, right? And it's hard to say that, right? Because as a parent, I have 2 young kids. My goal is to protect them the best of my ability. And sometimes it's the perception is that the best way to protect them is to put money aside for them. Where in reality it is build your wealth, you know? Now I did actually, I read a really incredible tweet that kind of like changed my perspective a little on that. So I want to mention it. Somebody said, I think it's better to give a kid $50,000 when he's 30 years old than to give him $500,000 when you die and they're 60 years old. Or it was something along the lines of that. Like it's better to get a small sum of money in your 30s when you need that, or you can use compound interest and things like that, as opposed to dying and giving them $500,000 inheritance. I agree with that. I really do. But in both cases, that person had money to give their 30-year-old and they died with a really good inheritance. Neither of those cases where it's like, it's better to give my 30-year-old $50K and that F's up my financial situation than, So I am for building the fins, right? I want to build the net worth of the fins. Now, do I put money aside for Avery and Brody? Of course. It's like part of their, quote, allowance now. I have money and I say, I'm going to distribute that money just like if I had a business, right? I would distribute that money to my employees. Okay. Now, my wife and my kids are not my freaking employees, but I run my household like a business. It gets distributed to expenses. It gets distributed to write-offs, things that make the family better. And it gets distributed to the people in there in the form, maybe we'll call them distributions and not salaries, right? My kids get a certain amount of money because I make enough on top of my needs that I can give it to them. But if my needs weren't met and my finances were in order, my kids would get nothing from me. Nothing. Until I was prepared to give it to them. It's a great question, and it's hard. It is. Callum. Thank you. The first pronunciation. I think I said Callum was the first one. So thank you so much. And it's so hard when it comes to kids. It really is. But you leave your kids $200K for college and you die and you got nothing, and now they have to fund your death, which I had to do with 2 parents. Like, that college fund meant nothing if you have to front tombstones and funerals and debts. And when my mom died, she had a brand new BMW. Like, a college fund that I had wouldn't have helped, so. Oh, guessing what nationality that is. You're guessing Scottish? Is that a thing? What makes you think Scottish? Well, we decide what that is. Let's get back to options. How many people we got in here today? Did I get I took down the number thing. 42. That's got to be a record. Oh, man, I got to have some more drinks before every live stream. Paul, you got a good question, buddy. This is going to be an option question on the poor man's covered call. It's very, very similar to, who was it? I think it was the third one that was anonymous. But listen to this question from Paul. It has to do with, I think, bag holding a poor man's covered call, if my notes served me correctly. Oh, somebody left one, so I got to read it. There we go.
Brad, quick question. Paul here. I bought some Leaps about a month or 2 ago so I could do poor man's covered call. And I bought the Leaps on a company called DraftKings, DKNG, but I like the company long term. However, it sold off because of a deal with Entain or whatever, and it's down about 20% from where I bought the Leaps. And the Leaps don't expire till January 2023. So I don't really want to sell covered calls against those Leaps right now when the stock is down so much. It was at 60 when I was buying the Leaps, and now it's at 50. And I'm afraid if I sell covered calls, I'll be at risk of getting assigned if I sell it at 53 or whatever, because the stock tends to pop quick,
Mm-hmm.
And I don't want to sell my Leaps real low in order to, close out of my covered calls.
Right.
So should I wait until the stock goes back up to close to where I bought the where I bought the Leaps at before I start selling covered calls? Any info would be greatly appreciated. Thanks, Brad, and thanks for everything you do.
Paul, you're right on the money, man. It's I'm glad I'm confirming your thoughts and not trying to sway you in one of the directions. First and foremost, you got till 2023. It's probably going to go up. Another great thing about Leaps, and this is kind of why I say that I don't buy Leaps options with the poor man's covered call in mind. Now, granted, if you're in my Discord and you know me, you've been around me, you know that I want to trade the poor man's covered call. But by telling myself that that's not my motive for the Leaps, I protect myself in situations like this. Because there is going to be times, especially throughout a year plus, that there's going to be a pullback or some sort of correction or something that happens with stocks, right? The stock market is a yo-yo going upstairs. So it's going to go up, down. Okay. Right now you're in that little bit of a down. And the beautiful thing is, I don't know if this is a real name, but I just call it a naked leaps. It's a naked poor man's covered call. You don't have any covered call, like keeping it all warm and fuzzy, which is totally fine. I would not risk it, right? Because you bought that leaps because you thought that DraftKings was going to go up. And are you the Discord member that's bag holding DraftKings in my Discord? Because I have somebody with the screen name bag holding DraftKings, but what's it? DKNG? But it's the one that reminds me, that makes me think of Donkey Kong. But yeah, no, you're writing the calls as a bonus. So right now is not bonus time to write those calls. You bought the call because you thought it was going to go up and you were going to crush money on premium and you were going to make money on that premium. So we need to be patient and wait for that. If you don't have the power to be patient, you shouldn't be buying leaps options. And from the sound of it, you kind of know that you're just going to have to sit on it for a little bit. And that's fine. You got a long time. Now, if we're 100 days out from expiration, all right, things are going to start getting a little bit weird because theta is going to start to kick in. How long can you really hold before that happens? That might just be a situation where you start thinking about, okay, I need to sell this. I need to sell to close this and either take smaller profits than I once thought, or, I wouldn't sell it for a loss until it's like at expiration, right? At least give it as long as you can to rebound. But I'm not gonna F with it. I'm not gonna get risky. Anytime I've gotten risky, most times I lose. Hold on to that thing, let it bounce back up. If you can get to the point, and here's something too, I'll tell you. And this is once again comments that I hear. If you're like bag holding it and to go above your break even, you're getting like $4 in premium. I know people that are like, no, I'm not even going to waste my time. Now you said it could pop quick. So we also know that from experience that the poor man's covered call, not that great with stocks that can moon and jump around. We want steady, consistent growth. DraftKings is not one of those. So this might not be a case where you even want to take the chance. But if you're above your break even, you can get $5, $4. F it. Why not take $5 every week? As long as it's above your break even, and if you get assigned, which you're going to monitor it, so it's not going to happen anyway, even if the close at a loss, it's a little bit. But this is a long game, right? And in the video that I'm going to release this week of the 2 leaps options that I closed, one was like picture perfect. It was, I couldn't have written down a better start to finish for a leaps option. The second one, which I still did really good on, it was not. It had everything that was crappy. I'm going to try and get that video out on like Wednesday. I got parent-teacher conferences this week. So in that, there was closing and rolling at a loss. There was times where I bought an option when I meant to sell an option. It was a disaster. But over the long term, by being patient, I ended up winning on that option. All right. So maybe check that video out as well. But once again, hold on to that thing. Let DraftKings go back up, or take a little bit of premium at a really, really, really small delta above your basis. If you're not going to go above your basis, we're not having this conversation. Just keep the leaps. Don't touch them. All right, bud. Thank you. Got a poor man cover where that was at 24, now it's at 18. Lost 40% of its value. Yeah, Tattoo Chef's been an interesting ride. When it was at 24, this is probably trading about 19 still. I have leaps options. I don't think I'm selling calls. Let me see. I'll just look. I'll bring it over here. I can share. I haven't brought my Robinhood portfolio up tonight. I'll bring it over to the desktop. You guys can see where we're at. Oh God, I love seeing it. $30,000. Desktop. Here we go. I wonder. No, I can't do it. Okay. So where's Tattoo Chef? Tattoo Chef's here. I got a 1250 call. And I currently do not have I have not written a call on it. Let's see what the value looks like on this thing. All time. Yeah, so That's when I got it, right? Is that when I opened it? I opened it on May. I opened it on May 24th. So I opened it right here. Hopefully you guys can see that. When the value was at 870, it got all the way up to 1165, like less than a month later, like a week later. Then it kind of just putted around, and then, oh my gosh, August 9th, it was like, hey, Finn, today we're going to trade for $9.45. Do you want to take the $945, or do you want to look like an asshole tomorrow? And then it was like, it dropped all the way down to $500. But then, look, this is why we trade options, and this is why it's really hard to make a full-time career out of it. So in August, so May, June, July, August, 3 months later, it dropped to 505, and I thought my world was going to end. Then on September 2nd, it was back over $1,000. And you'd think, right? You'd think that when it got here and I got bit and it dropped down and then it climbed and climbed. During this climb, I was thinking, I'll just get back to even. Let's close this thing. And then I got karate chop throat punch, hard body karate'd down all the way to 550. Then you'd think when it climbed back up to 1100, I'm going to get the hell out of there, right? Nope. Right now it's trading for 590. But if we look long term, right, when does this bad boy expire? April of 2022. I got time. When I'm about 100 days out, if I'm 100 days out and it starts to climb up here, yeah, I'm probably going to get out. But why do I not have a call against it? Because, I mean, this is off hours, so that doesn't really mean that. So these prices don't really mean that much. But right now, I think my break even on this is $20. So I can't, October 22nd, I'm getting $1. The 29th, I'm getting $13. And on the 5th, I'm getting $18, right? These are all crappy prices because it's the weekend. And they're all red, so the values of those options are down. So, I mean, it's okay not to have a covered call against it, you know? Tattoo Shop's been an interesting ride. I still think it's going to be good. You just saw my Strava? What did I say on Strava? What? My Strava's dope. My Strava is active. Oh, is it about how I took the class with that woman today and it was terrible? Some Peloton instructors are just... She was so bad that I did the whole Peloton class on mute, listening to my fan and my breathing and my squeaky pedal was better than listening to her and her playlist. That's probably not very nice of me, but she sucked. Let's keep it going. Let's keep this going. I'm getting everybody. 45, you guys rock. 45 people, guys, can you please give the video a thumbs up and know that that thumbs down was before we even started. Yeah, I rode the whole ride on mute. Thumbs down before it even started. I don't know why I got this little cough today. Next question's coming in hot. Oh, and thank you. Somebody just gave me a thumbs up. Thank you. They're coming in. Thank you. What are we up to? We just did Paul. Steve's next. Here comes Steve. And I can't wait to get to the next one after that. Well, let's do Steve. Steve's a good question, though.
Hey, Brad. Steve here. So I've been wheeling and dealing like crazy, making some mad cash, and recently got a covered call assigned, so I'm now flush with some cash, and I want to sell more options using the wheel. But instead of selling 2 option contract puts at the same strike to start the wheel, I intend on selling 1 put at a 20 delta out of the money and another put at a 10 delta out of the money. Now let's say the 20 delta put gets assigned. My plan would then to sell a covered call on those shares and then sell the 20 delta put as well, creating a so-called covered short strangle. I want to know if you use this modified wheel strategy to include strangles or if you just deal with multiple contracts at the same strike. Any thoughts? Thanks.
I'm responding to Aaron first. Hold on. Okay. Thoughts on this? I love it. I don't have anything against it. This is going to be a short answer. It's really quick. To be honest, I've never had to deal with this because I've never had 200. I don't think I've ever, with the exception of VTI, I don't think I've ever had more than 100 shares of one particular stock. Because when I was dealing, what do you say, wheeling and dealing? And when I was doing that, I was more focused on getting a diverse amount of stocks than building up one position with a bunch. But I'm not opposed to doing that. I probably would break up the strikes as well. If I had two, and we talked about this, and I'm the video made it to the main channel with laddering options with multiple contracts. And to be honest, the comment section of that video was very, very educational, right? I'd never done it, and we had kind of had a conversation like this where I wasn't sure. And some people got in there with experience with trying the ladder versus just doing all 20. I think it was 20 contracts this guy was talking about, doing them all at once. And a lot of people were like, no, don't ladder them. Just put them all in. So, and I took that information with a grain of salt. I loved it because I don't have personal experience. But what you described, Steve, I'm totally okay with it. And I don't think you're doing anything wrong. And it's one of those things, you try out different things, whatever works best for you. I just personally haven't had enough shares to sell more than one contract on one particular stock. But I'm not against straddles and strangles and things like that. I just personally don't do them. Yeah, all 20 contracts, people said that, yeah. Covered strangle. Oh, so Aaron said, I've done the covered strangle quite a bit, especially when I'm bag holding a put that goes way down. And I can't sell calls above my break even. Right on. Thank you so much, Aaron. Boop, 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 boop. Oh, man. Where am I? Damn it. All right. Right into the next one.
Hey there, Brad. I had a quick question regarding to IV and IV Crush, specifically pertaining to buying leaps.
This is a really good question. Well, a lot of us in here that have been around for a little bit know the answer, but if you're new to options, listen to this question because it's going to be something that you definitely need to know when it comes to leaps options. I'm going to start it over. So anybody that was like kind of like letting this play in the background, if you're new to leaps, listen to this one.
Hey there, Brad. I had a quick question regarding to IV and IV Crush, specifically pertaining to buying leaps. I would never buy just options or buy calls. All I'm interested in is buying leaps from my research.
Oh, man. I'm sorry. X'd out of it. Sorry. My bad, guys. Hold on. You know what? I've been drinking all day. Let's try take 3.
Hey there, Brad. I had a quick question regarding to IV and IV Crush, specifically pertaining to buying leaps. I would never buy just options or buy calls. All I'm interested in is buying leaps from my research. I'm thinking to buy my first leaps this coming week, and I'm thinking to buy them on Facebook. So Facebook right now has, took a big downturn. Its IV or historical IV is definitely higher than its normal. Do I even have to worry about IVs when I'm buying leaps, since they're made mostly of intrinsic value? Or are you even considering an IV crush, or how bad does it really affect your leaps with IV? What is that relationship to in regarding to leaps? Also, when do you sell your leaps? Do you wait 2 months before so theta doesn't ramp up and eat or decay more of your call or your leaps? Or when do you actually sell that? Does that even matter, since the intrinsic value is really mostly what that call is and not extrinsic? When do you sell your calls so you're not affected by IV? And does IV even play a role in earnings or when the stock is really low? Because that's the only time it makes sense for me to buy a leap, is when the stock is low. But when the stock is low, IV is high. I appreciate you. Thank you so much.
So I'm going to just say first and foremost, when I sell leaps, question I get a lot, and I don't want to give too much away from my video this week because I want you guys to watch it. So my video this week, I have a video coming out this week on when and why I sell to close leaps. I've talked about it, definitely about how I'm definitely going to try and start looking at 100 days or so and try and make a decision before 45 days till expiration. So I get like kind of almost 60 days for earnings, a really weird green week like we really just had where things are shooting up more than they probably should. There's going to be different factors like that, and I'm going to get into all of that in the video. But does IV factor in when I buy leaps? The answer, yes. Scream it from the mountaintops, yes. I mean, it's almost just as important to me as the delta. And only because I've made my mistake. Now, if you don't understand how the implied volatility is going to work, are you going to screw yourself? You might, and you might not even know it. Because if you don't understand how it affects extrinsic value, playing with theta, then you may not even realize it. You might just see the value of the option going up a weird amount or down a weird amount and not understand it. If the IV is high, that means that the value of the option is high. That means the value of that option is overpriced if the IV is up there. Now, the latter side to that is if you know the historical IV is low, this is a great time to buy options because statistics tell us that everything converges back to the mean. So if you're an IV rank that's below the average, there's a pretty good chance it's going to converge up to that mean, and you are going to get money on the value of that option right there with extrinsic value. Okay? We want to buy options when implied volatility is low. Now, low is only relative to its own historical path. You can have something that stays at 70 IV all the time, and you can have something that stays at 30 IV all the time. One isn't necessarily higher than the other. It all has to do with itself. Because if I stay at 30, okay, my extrinsic value is not going to expand and contract as much because it stays at 30. Same at 70. It's the changes in implied volatility that are going to affect the value of that option. What the hell is IV crush? I also did a video on the main channel that is strictly based on IV crush. Brad Finn, IV crush, type it in. I think that's this face. If you watch that video, that's a full understanding of IV crush. The long and short of it is there's certain periods in the course of the year where implied volatility on a stock is going to go up or down. Earnings is the most common one that we talk about. As we approach earnings, before we know what's going to come out, any news, did they beat their earnings per share? Did they get crushed? Were they profitable? All of these unknowns about what's going to come out in their earnings report raises the implied volatility. So if you are buying that option as we're approaching earnings, well, then earnings report comes out, all of the unknowns go away, the volatility and crashes down. And the stock price can shoot up. Maybe the earnings call was incredible. Best earnings call in the company's history. And in the days after earnings, that makes the share price go up and up and up. But the value of your option is going down and down and down. You're like, what the F is going on here? Well, what's happening is that implied volatility and that extrinsic value is hurting you more than intrinsic value. The difference between the strike price and the share price is helping you. You must, if you want to be long-term successful at leaps, you must understand implied volatility. You have to understand it. And finding historical implied volatility can be really, really annoying. Most of them, if you want to get good percentages, they're going to come with some of those paid services. If you have a pretty good brokerage, one of the big ones, you can get IV rank and kind of get an idea. But you should definitely understand at least that we don't want to buy options during periods of high IV. That might be a good time to sell, right? That's why some people try and sell calls right before earnings and use IV crush to their advantage. Sometimes they don't get crushed. Not every earnings call comes with grandioso volatility, right? If you're just a regular old company and kind of blue chip and you're kind of stable, like, yeah, you don't see those fluctuations in IV. Facebook comes with a lot of volatility. I mean, Facebook is like one of the most addicting drugs there is. Like, you know, it's effing with your life. You know, it's making young girls feel bad about themselves. You know, it's leading to teen suicides and all these things through Instagram. Like, but you still log on. No one's going to stop Facebook. I feel like I can't wait for the day that Zuckerberg is in front of Senate. He's like, you want to know what? You guys keep calling me to Senate and Congress every single month. When are you guys going to get the picture that I don't really give a crap what you say? You can't shut me down. I don't see how we can. So good luck with the Facebook. It's got to be a hard thing. It's kind of like Tesla. It's got to be a hard thing to trade options with because of that implied volatility. But yes, please, no IV. Please, no IV. This is a great question. Closes the message. Yeah, you guys, I have so many screens open right now. It's freaking madness over here. And like I said, it's a nice full day. It's flannel season. I had a terrible Peloton ride. I started drinking beers a little bit early. It's the weekend of my mother's birthday. I had no excuses. Your question's next, CB. I wasn't going to get to it. Your question's literally next. Sorry, it sounds surprised I told Ivy. I was told, well, you didn't talk about that in your voicemail. Diego, I teach high school physics, bro. And personal finance on the side. I recently started selling spreads. I was told selling high IV is good. However, when I look up, there are IV scores, IV. Oh, yeah. There's so many different IVs. When you understand them, you understand them. It's one of those things where, like, if you listed all the different types of IVs, especially, I probably couldn't come out and define them all. Because it's the easiest one to find, I use, like, the percentile, the rank. So, like, for example, if it's percentile rank is like 98% IV, that means that like 98% of the time, IV has been lower than it is right now. So that's really, really high. Where if you have a percentile IV rank of like 20, that means 20% of the time it's been lower. So that means 80% of the time it's been higher. So it's probably going to be moving upwards in as far as because statistics show us. So like, yeah, you definitely have to like look at the two. You can go by any one you want, but you just have to find which one of your resources, what implied they give you, and just learn that one. Because depending on what platform you use, depending on what sites you use, you're going to get different information. So just make sure that the information that you just find out what your platform offers. Like, for example, Fidelity, they use IV rank percentile. So that's kind of like what I know. The index, there's like the index and the historical, they kind of like go opposite. So I think the index is a prediction, like almost like a future. I think I said I couldn't come up with all the IVs right off the top of my head because I know the one that my platform uses, and that's the one that I focus on. Oh, Armo, what's up? How are you? Okay, cool. All right, so that was your question. All right, so let's see what he said. This is Armo. I just asked IV questions. So yes, the IV still matters, even though I'm going to hold it for a year, and the intrinsic value is much more than the extrinsic. Yes, intrinsic value, very, very easy to understand, right? We know that we can see it and calculate it instantly. Extrinsic value, if we know intrinsic, we can calculate it, but what determines it is hard, right? So we just kind of want to know the intrinsic so we could figure out the extrinsic. Knowing how it's going to vary, we have to look at like models and formulas and equations. But even if it's all intrinsic and low extrinsic is very, very fickle. It's volatile. I mean, by definition, extrinsic value is theta and implied volatility playing together, right? That's why as we approach expiration, intrinsic value crushes down to zero because theta eats it all away. So the fact that it's further from expiration makes me more fearful of volatility. If you were saying the opposite, where like, Finn, I'm really, really close to expiration here, that means there's less likelihood of extrinsic to do something wacky and crazy. And right now you make, okay, it's a little high. Maybe it's just above the mean and you think it's going to go way above the mean, right? You're just playing statistics at this point. Like, if you really, really want to get into it, it's kind of like making your first real estate deal. Do you want to do it because you're excited to get in on it and you're willing to take more risks to do so because you're excited, when you know deep in your gut you should probably wait a little bit for that IV to crush a little bit and then get in? It's one half dozen the other. At the end of the day, it's ultimately up to you. The thing that I just want you to understand, Armo, is that I just want you to understand what the outcomes and possible things that are going to happen. You will ultimately get to make the decision, but I don't want there to be an outcome that you're like, oh man, I didn't even know that was going to happen, right? Rule number one options, know all your potential outcomes. And the further you are from expiration, one of those potential outcomes is extrinsic value can do some wacky shit and really mess with you. So just be careful of it. That's all. Just understand the risk. Sometimes risk is dope, but you just have to understand the risk. That's all. So you only buy the Leafs when the stock is at high because that's when IV is low. Yeah, generally that is true. When the share price goes up, IV goes down. Okay. Now this goes also to like when we want to buy Leafs on red days because the premiums are lower for call options. So, I mean, there's many different factors that are going to take into account this IV. Many things factor IV, which is why to eliminate all of the things that affect IV, I just look at the historical value. I don't care why it's below the mean. I don't care why the IV is above the mean. The only thing I care about is that it's above or below the historical mean implied volatility. I don't care the factors that made it do so. Right? If it's below the mean, I'm like, okay, good. I'm probably in a more favorable position for the extrinsic value and IV to go up. Therefore, the value of the option is going to go up, regardless of intrinsic value. If I see it above the mean, the only thing I'm thinking to myself is I have a pretty high statistical likelihood that IV is going to go back to the mean, which means my extrinsic value is going to go down regardless of my intrinsic value. I very rarely look at intrinsic and extrinsic and how they might affect one another. I frankly don't really look at intrinsic value at all, because what do we need intrinsic value for? We need intrinsic value to exercise the option, which I'm never going to do. Right? It just tells me if the option's in or out of the money. The thing I care about is what's implied volatility and theta going to do to the option's value. I don't care about intrinsic value, to be honest. I really don't. I mean, I buy deep in the money, which helps because if you understand intrinsic value and why we go deep in the money, that just allows you to say, okay, I got to put up this amount of premium, but that's okay because most of that is an intrinsic value. But I don't make decisions according to how much intrinsic value that option has. But I definitely think about how much extrinsic value it has because of IV. And theta, right? That's why I won't buy an option that's 40 days till expiration, because I know that I'm going to get smacked in the face. And I know that extrinsic value can vary much faster. What do they call it? Vague exposure. My extrinsic value can go and screw up the value of an option exponentially faster than intrinsic value can affect it. So if you have a follow-up, let me know. Thank you so much. I think you've left the voicemail before. Keep them coming. Love it, bud. Oh, okay, here we go. So let me read this one from Calum as well. Do you think when you have a larger account size, relative, it is better to switch from poor man covered calls to covered calls instead, as it's less risky, it requires more capital, and has a small RI, but it's much safer? Yeah, I'd have to agree with you. right? Why do I love the poor man? Why do I love the Leaps option? I made the video, like, stop buying 100 shares. It's definitely, you get the leverage of 100 shares. You get the right to call, collect some premium, and you don't have to buy 100 shares. And when I criticize the wheel, it's expensive, especially if you want to do it with quality stocks. Absolutely. So as my account size goes up, to me, it's not really my account size. It's how much money am I willing to trade options with as a percentage of my net worth, which for those of you that have been following me know that, like, if I am getting below 90% of my net worth in, like, VTI, that's too risky for me. If I was 22 years old, that number would probably be 25%. So really has nothing to do with the percent of the size of my portfolio. It has to do more of, like, what's my percentage of my foundations, my index funds versus my options. But I, especially with my love recently of cash secure puts and doing cash secure puts with value stocks, it's expensive. It really is. And every day I want to be like, I'm going back to the wheel. I'm going to go back to the wheel because, like you mentioned, it's safer, it's less risky, things like that. I'm like, I'm going back to the wheel. And then I see the premiums for Pepsi or Waste Management, right? I just sold off Waste Management and they have earnings coming up this week. I'm hoping for a huge Ivy crush, and I can't wait to buy another Leaps on Waste Management. Can't wait if they get the Ivy crush. Would I want a wheel? Wait, like, if I had to choose, and you're like, Brad, I'll give you the capital to do the wheel with Waste Management or to buy a Leaps and do poor man's covered call Waste Management, I'm going to take the wheel all day, every day, except for twice on Sundays. But yeah, I think we're on the same page when it comes to what you just said there and the thought process behind it. Eventually things will go up, Armo, but sometimes with options, expiration gets in the way of eventually. Two more. Actually, it's actually one more because I don't think Charles is in here today. I love when he leaves voicemails. I'm going to come out. Maybe you guys can help me out. I have no idea what he's asking in this question. It's a quick voicemail. No idea what he's asking. I think I do. I have no idea. So I'll play this one first because it's not going to be a long expiration. And just because Chris said that he has all the time in the world, I'm going to make him wait.
Brad, how are you doing, pal?
Okay, well, he's very loud. For those of you that have been here for a couple of weeks, you recognize his voice. So funny. Love it. Oh, come on, Brad.
Brad, how are you doing, pal? All right, man. So I did go back and check to see exactly how many of your videos I saw, and it's 72.8%. So not too shabby, huh? Yeah. All right. So my question today is about cash secured puts, and I want to know, what is your limit as to open interest? Like, how many people, or how many contracts would you need to go into a cash secured put? Is it like 10, 15? It's one of the questions I have, and I just don't have an answer for that. So if you could help me out with that, that would be awesome. Rock on, pal.
Charles, first, when I heard this today, I tried to find you. My Discord, Average Money's Discord, I don't know where to find. I tried to find you in comment section. I don't know where you are. You're just under the radar. I have no idea what you're asking me. I have no idea. I mean, when you say, like, how many contracts do I need? I mean, I only need one. I mean, I don't know. I'm sorry, bud. I have no idea what you're asking me. Does anybody know in the chat when he said, when he's like, what do you need? 15, what does he say here?
Your limit as to open interest. Like, how many people, or how many contracts would you need to go into a cash secured put? Is it like 10, 15? It's one of the questions I have. And
so when he says, like, how many contracts would I need to go in it? Yeah, like, just one. Cash secured put, I'll just do one. I don't know. Maybe I missed something. Oh, Aaron says he's talking about open interest. Is he mixing up shares? Yeah, see, I don't know. open interest we're thinking? Let me go back and think of it. Let me go back. Let me look at it again in terms of open interest. Is that what he's talking about? Oh, see? That's why you guys are dope. Hold on, stand by. Let me
As to open interest. Too shabby, huh? All right. So my question today.
Did he give it away when he's like, how many people? Did he mean like how many people does he need to be selling them?
Is about cash secured puts. And I want to know, what is your limit as to open interest? Like how many people?
Oh, he did say open interest right there. Let's go. You guys are all right. All right. Okay. He did say open interest. Shit.
All right. So my question today is about cash secured puts. And I want to know, what is your limit as to open interest? Like how many people, or actually how many contracts would you need to go into a cash secured put? Is it like 10, 15? It's one of the questions I have, and I just don't have an answer for that. So if you could help me out with that, that would be awesome. Rock on, pal.
I listened to that voicemail 10 times today. I didn't hear him say open interest once. Oh my gosh. I need to refocus. I'm shot. I didn't hear it now. I guess it's like kind of like the lyrics to a song. You know, when you like when you're like hearing the lyrics to a song or you hear a song for like 10 years and then somebody tells you what the actual lyrics are and you're like, how did I hear it any other way? I listen now. I'm like, how did I not hear that dude say open interest? To answer the question, bud, I look more at the bid-ask spread, which obviously is dictated by open interest. I also don't think too much about open interest because I don't trade stocks with very low liquidity. I don't. So if I'm being honest, I don't really look at open interest ever. I really don't. Maybe I should be. Somebody can call me a donkey. It's just not something that I look at because maybe it's because I've learned to understand bid-ask spread. Like guys, when I make a trade on Robinhood, I never get asked. People send me a screenshot all the time where it's like, the bid-ask spread on this is very, very high. Maybe you want to put in a limit order. I never get that. I never trade stocks with a huge bid-ask spread. And I'm trying to think, maybe with a cash secure put, that actually might, because I've been pushing my cash secure puts out further in expiration, where there definitely is going to be lower liquidity. The thing is, I'm kind of doing it at the money. If I was going to do like a cash secure put that's way out of the money, then I might have liquidity issues. So this might be a question I just have to come back and think about, like as I gain more experience with longer to expiration cash secure puts. But to be honest, right now, A, I don't look at it. B, I know how to recognize tight and really wide bid-ask spreads. And yeah. Charles, thanks, man. I hope you leave me a voicemail every week, man. 50 people got in here? Yes. God, my Discord is it's paid. It's paid. And if you want, you can DM me, find me on Instagram or something. I'll give you a code for the first month. And if you don't make your money back in the first month, I think there's people in my Discord here. It's virtually impossible not to be. I'm not saying, oh God, I just spilled my beer all over me. I'm not saying that you definitely will make your money back. I'm saying it's like how I tell my kids, guys, this is going to be a hard test to fail. I've given you so many questions. We've done so much review. This is going to be a hard one to fail. In that sentiment, I can say, if you can't make the $20 back with the information you learned, yeah, that was a party foul. This one's actually kind of empty. These things with the Yeti coolers, this is a mental mind mess. If you're a guy like me, I'll be 40. I've been using these neoprene koozies my whole life. Drink beer, buy stocks, JJ Buckner. They're really light. So like when your beer is empty. These Yeti coolers these koozies are so heavy. Do you call them koozies? Is that a New York thing? Hold on, I'm gonna zoom. They're so heavy that like you pick it up and you're like, I still got so much of my beer left. This is so dope. And you take a sip and it's empty. because the thing is so I didn't really just spell. Aaron said I've made yearly back 100x. That's aggressive. I don't. What you? I mean, we don't have the seniority list anymore, but if we did, I think Aaron would be probably top 5 seniority. You were in on the Discord. I mean, we started the Discord August of last year, I think. August of last year. Aaron, when did you get in? Beer is not a mixture. It is a solution. You could filter it through water, and the alcohol and all its components will go through. But it's actually not. Shit, now that I make beer, you can filter out yeast. Beer is a mixture. Luciano, your chem teacher, lied to you, which is why he started as a physics teacher and then dropped down to chem. For those nerds out there, a mixture can be separated with a filter. A solution needs distillation. Vodka is, in fact, a solution. Beer is a mixture. Solution. September 13th. Yeah, so Aaron, you've been around. I don't want this to be like a shameless plug. Like, the people in my Discord know that I want it small and I want it to be intimate's like the wrong word. I want it to be, I want the people there to be there forever. Like if I could shut it down and not let anybody else in ever again. But I know that like people hear about me and want to get in and they could be just as valuable as Aaron, who's been there since September 13th, which is why it isn't closed. But like, I want it to be small, tight knit. Tight knit's probably better than intimate. That just came to me. I should probably use tight knit more. So I'm not saying like, you're an idiot if you don't come in my Discord because you're going to make all this money. I'm just saying like, I just did an anonymous form in my Discord, and one of the questions I asked is the price too little? I did the 3 bears, too little, too much, or just right. And I think 75% of people put just right. 25% of the people said not enough, and zero people put. And I have over 400 people in there. Not everyone filled the form out. Actually, it was a pretty small number, but nobody said that it was too expensive. And yeah, so if you're thinking about getting in, that's why a lot of people in there too. If you add value to my life, like send me a DM. Give you the first month, half off or something like that. You can tell me if you did well. Oh, we're gonna get nerdy here, Jeffrey, huh? Can you have a combo, a mixture that has parts of solutions? Say 2 solutions mixed together that can be filtered. 2 solutions cannot be filtered. A solution is a solution. But there are chemical reactions where, besides distillation, that you could separate a solution into its parts. We call that sediment. Like, if you've ever, not many people have done this. If you put soy or oat milk in your coffee, it coagulates, right? That's taking a solution and turning it into a mixture. That you can do. If you choose a solution, like the most common solution is salt water. It's a solution. If you take sandy salt water, that is a mixture. That's the lab we do in chem. Right? You could pour salt water through the coffee filter and it's still salt water. But then when you mix it in the ocean and make it all cloudy, but then you have homogeneous or homogeneous and heterogeneous solutions, which I've been in chem in a long time. I'm sure the left has canceled that. You're probably not allowed to use it, but I always said homogeneous anyway, which is the proper way to say it. But I don't think you could say homogeneous and heterogeneous anymore. Probably not. You probably can't do that. So the kidneys well separated. Beer is no longer. This is where it's going. I mean, I'll get nerdy all the time. At 20 is very reasonable. I try and make, to be honest, when I had it, because I've had it all different prices, And what I've realized is this goes back to like my days at the brewery. When we used to give away $4 pints, there'd be a fist fight every Friday. When we bumped it to $6 pints, there was a fist fight once a month. When we moved it to $8 pints, we haven't had a fist fight in 5 years because you weed out the riffraff, right? When I had it as $10 and I'm like, I'm going to make it open to everybody. Well, I found out that everybody isn't cool. So like $10, it was like a lot of people coming in, effing everything up, and then they would just leave anyway. So that was bad for business. Where I found out if I raised it, and this goes, if you guys are in business, you need to know who Alex Hormozy is. Hold on. I had to set my autofocus. Alex Hormozy, he always talks about like never lower your prices. And he backs it up by saying you never lower your prices to make people an offer that they cannot refuse. You raise the value that you have to offer to meet an offer that they can't refuse. If my Discord was like shit and I wanted to charge $20 for it, yeah, that would be. But I'd like to think that there's a lot of value in there. And not just options. Options is like where people make a lot of their money, but the ancillary things that go on bring a lot of value. So, yeah. That's what I mean. A jar that has sand, salt water, and sand, that's a mixture. That's a mixture. That's no longer a solution. Once you add sand, no longer a solution. If they don't see the value of the Discord, they probably don't see the value of money. Yeah, I mean, Discord's also not for everybody. Some people aren't like chat forum type people. Some people are shy and they feel weird asking questions. But the people that just dive in and start asking questions, they get a ton of value quick. Now, one of the things we struggled with in the Discord was continuing to add value, which is I was stubborn and I was being an asshole. Like I hurt my Discord for months because I was so stubborn about not letting conversations go on, not letting, but I didn't embrace and encourage conversations about technical analysis and day trading and what other people were trading and things like that. But then like my people that I trust that have been around for years are like, Brad, I'm at the point where you've taught me everything I need to know about the wheel. Like I need more. And not to mention, Brad, you need to realize that the Discord community is far more intelligent as a whole than you are. So let people shine. Let people shine. Right? Zach, who called me Brian a couple of weeks ago, and it was the funniest thing that ever happened on this and for a while. The amount of value that dude has come in and added to my Discord in a month, talking about shit that I have no idea what he's talking about. I try. He goes so fast, I have no idea what's going on. But that's things like that are continuing to add value to the Discord. Sending out forums and asking for feedback. You know, those are things I plan to continue to do. This live stream is brought to you by my freaking Discord. Also, too, I'm afraid that YouTube's going to suck. And then if YouTube sucks, I'll at least have the couple hundo people in the Discord and we'll just kick it. And I did say I want to have a Christmas party, but I have to wait till COVID's like over. I do not need that liability. But it'd be cool, like, I can't rent out, like, and maybe I got to get in the Discord and ask how I can organize this. I can't really, like, rent out the brewery for a weekend and have people, like, camp at the brewery and come stay. And I feel like doing the whole convention thing where I'm like, hey, everybody, like a wedding, like I blocked out a group of rooms at a hotel. Why doesn't everyone just fly out and we'll just hang out at a hotel or at least have a home base at a hotel? And I'll show you, because I can't house everybody in my house. I have a small house. You know, I want to do that and give back and like fund the whole weekend, you know, like drop $50,000 back into the Discord of, you know, people that could come. Maybe actually when I say like, we have a lot of hotels quick. Maybe if I did block it out like a wedding, and like I planned out an itinerary of things to do, people would come to New York. But it would have to be like, maybe we'll plan that for the spring or something. I don't know. Maybe I'll bring that up in the Discord. I've been drinking. Yeast is a sand. It sure is. I don't go on Insta anyway. Definitely hit me up on on Twitter. All right, CB, are you still here? Discord cruise. No, I don't want you guys to pay though. Well, I mean, I guess I could pay. I don't want. That's why I had the seniority list for a while, because I was gonna pay. I was gonna like bring like the top 10 people like maybe on a cruise, and then I said when I get to 100,000 in VYM, that we would just have a party, and I've hit that. So I'm gonna sell off view, because early in the Discord days, when we were just like a dividend, when I was a dividend channel before even really options, I was taking all the money from Discord and just putting it into VYM. I said when it gets to 100K, we'll throw a party. It's hit 100K, but I just don't know the party that's fair. I wish I lived in one of the flyover states where it'd be easy for everyone to converge on one spot. And then my wife is just like, Brad, you just have to make the event happen, and the people that can come will come, and the people that can't come can't come. And I'm like, that's right. But then I'm like, what do we do? Do we do a weekend thing where like everyone flies in on like a Friday? We have like a happy hour, and then like Saturday we like learn and do stuff during the day, do like round tables during the day, and then Saturday night we rage it up and we just have a freaking party, and then everyone flies home on Sunday. I could fund that. I don't know. Maybe we'll do that. That sounds so much fun. I'm just self-conscious. I'm like, no one would come. Discord haunted hotel. Let's go. C-Night, that's perfect. I'm a fly to state, Robin. That's right. I'm not a flyover state. I'm a fly to state. Would I tell the hotel? Anybody work for a hotel? Would I tell the hotel that I'm having a wedding? I don't think I can. I don't think anybody's gonna be flying Southwest anymore. I don't think I could just be like, hey, I'm trying to throw a party. Can I block out a bunch of hotel rooms for a discount? I don't know. That's what I'm gonna do tomorrow. I'm gonna plan something. Stand by in the Discord tomorrow. I don't think we could do it this year. I would want to. How long? I'll ask the Discord. Anyway, let's get to CB's question. Stand by.
Hey, Brad, it's Chris. I just wanted to say thank you for everything. Because of you, my wheeling has become so much better. With that being said, I've now started selling credit spreads with the premiums that I'm making from the wheel. And I've been told that I shouldn't set closing limit orders for credit spreads. And I haven't been able to find why it's good or bad. And I've been selling butterflies and condors and setting a closing limit order for 50% profit. And I was told that could be dangerous because of bid-ask spread. And
I meant to pause it because when you said
told that
when you said the 50%, I thought, are you watching Alpha Option? I know that those guys are, because I only know that because every time I say I want to close things at 75%, somebody's always like, Alpha Option says to close at 50%. I'm like, I don't know who that is, but okay, like, cool. I don't know. So when you said 50%, I just thought of Alpha Option. Oh, let's go back and finish your voicemail.
Butterflies and condors and setting a closing limit order for 50% profit. And I was told that could be dangerous because of bid-ask spread, and that didn't make any sense to me. So I'm hoping you could shed some light on that and the pros and cons of setting a closing limit order so that you can close out the trade as opposed to manually doing it like right there, right and then. I don't know.
So here's how I feel about the spreads. Number one, I'm not a huge fan of spreads anymore. with the exception of the poor man covered call. I love credit spreads. I don't see, and I listened to this voicemail this morning or whenever you put it in, and I tried to do some research as well because I wanted to add value, because at first glance, when you said it, I said to myself, I can't think of any cons either. I really can't. And from what I read, everyone says it's a pro. That's the impression that I'm under too. When we set limits to close and we close early at smaller percentages, whether that's 50 or 75% or whatever your percentage, the fact of the matter is your win rate goes up. Your probability of profit goes up if you are willing to collect less than 100% profit. Also, when you close and set limits to close, like, you don't let time screw you up. Right? When we sell options, we want to get in, get money, and get out. So, like, I guess the quote exposure, you limit when you sell a limit to close. I'm curious like what the negatives people say, or like, are they just saying it's dangerous because they heard that and they don't know? What's the worst that can happen? I guess with any limit order, the worst that can happen is it shoots past your limit and you are stuck to that limit. Where if you wouldn't have set a limit, oh, hold on. I gotta turn this fan off. Hold on. I have automatic fans because I'm in the basement, like fans and dehumidifiers. So that means it's really late. So I had to shut that off. The risk with any limit order when you sell that is it could shoot past your limit. Where if you wouldn't have had a limit order, you could have made a little bit more money, I guess. Like if you set a limit at 50, and if you were sitting there at the computer, you might have been able to close for 60. I guess that's the only con. I feel like the only risk is losing a greater potential gain than 50%. That's all I see. For me, the reason, and somebody asked me this the other day, like, do I set that limit to close immediately after I write the option or buy the option? Well, I don't really do at least. But when I write options, when I sell calls and puts, am I doing a limit to close immediately, or do I just do it later? I do it immediately. Every single covered call that's not in a leaps, so every single wheel, every single cash secure put that I have, and every single covered call that I have has a limit buy to close on it that's set immediately. Now, do I still monitor it? Yes. If it's like it's 70, to be honest, if I like wake up and pre-market, it's at like 70%, I cancel the limit order. Because if I know that I'm going to be at my computer and I'm going to be watching it throughout the day, I might roll the dice and see if I can get 78. And that's what happens. Because in the Discord too, like I'll post a buy to close at 80%. People are like, I thought you close at 75%. What are you not telling us? What do you know? And I'm like, fact of the matter is, it was at 72%. And I was sitting at my computer and knew that I was going to be sitting at my computer for an hour. So I canceled my 75% buy to close. And then it jumped up to 80 and I closed it. So I'll do that. But as soon as I wheel, I say, I take my premium, I multiply it by 0.75. You could do it either way, or you could just multiply it by 0.25, however you like to do the math. I like to multiply it by 0.75 and subtract it, and then because what that does is that gives me my limit order. So I write it for $1. I type in 0.75. It says 0.2. It leaves me with 0.25. I write my limit order for 0.25. Done. And if I happen to be at my computer that day and I'm watching it, but there's nothing better than like you get caught up in a busy day. And then at the end of the day, you like go through your emails and you look and it's like, oh, your order was executed. And you're like, oh shit, I just made 75% on that covered call, and I did nothing today. That was awesome. I didn't have to monitor it at all, and it's Wednesday. It doesn't even expire for 2 more days. That's awesome. So I try and do that. All right, that's it. I don't see any negatives. I'm with you. Keep, as far as I'm concerned, and unless maybe somebody out of the 43 people that's here watching, if you know something I don't know, please let me know. Add some value, and I'll ask the Discord. I didn't have enough time today to really ask, and you're in the Discord as well, so please ask. And I think you're also in the chat that we're not allowed to talk about, and you haven't been in, so what the F? What the F? What the F? Speaking of which, I've talked to Grizzle Sirens. He has to get in the super secret chat. Let me see if we have any last minute questions, because we've been streaming for over 2 hours now. I haven't had any whiskey yet. When in Rome. Finpalooza 2022. I will we'll get people together. Get people together. I'll ask JJ. JJ's coming out. We're EDM fans. So he's coming out to see Two Friends the weekend of January 29th. If you don't know who Two Friends are, go to Spotify or go to YouTube and type in, sounds ridiculous, Big Booty Mix Volume 19. Me and JJ, we like to do that. So he's coming the 29th of January, but that's my daughter's birthday as well. So I'm already going to be in trouble for that. I haven't told Tara yet. Hopefully she's in bed. What time is it? She's in bed. I'm trying to think. Finapalooza. Maybe I'll tell Tara that's what I want for my 40th birthday. My birthday's in March. Maybe we'll just invite the whole Discord out, and we'll do like a Brad's 40th hotel party. I'll find a cool hotel near the airport with a sick hotel bar. I'll stock it full of Dubco. I'll get all my restaurant buddies. We'll do a different restaurant. We'll do a restaurant Friday night for happy hour, Saturday for lunch, Saturday night for dinner, and I'll make them bid it out. I'll have them pay us. We'll have a good time. Think of that. Maybe we'll do March 2022. Because I'll get excited and be like, let's do it next month. But people need to plan shit. So maybe we'll plan it for March. But I'm also training for a 50-mile race next year. So my drinking is going to go down significantly. I know. I know. I'm screwing with Grizz. I gotta email him today. Calvin, thanks for being here, man. Without you and the questions, I would not be here. So, beer number 4. What number are you on today or the live stream? Live stream. 1. Oh, 1's on the floor. 2, 3, 4, 5. 6 on the live stream. Probably, I don't know, 15 for the day. I haven't put down a brick yet, so. We have our own vices here in Colorado. Yeah. Some of those vices New York made legal this year, so. He's here too? Or she? All right, guys. Any last minute questions? Got to continue my vices. Some of my Colorado vices so I can get to bed tonight and actually fall asleep. I feel like I went through them quick tonight. I don't know how many of these are going to make it to the main channel, but I have a lot of actual videos, real videos coming out. Ones that you actually use this mic up here. Can you see that one? No, barely. And yeah, join us on Average Money Wednesday night. Oh no, Average Money Wednesday night's going to be late. I have parent-teacher conferences this week. So I think Average Money, To be honest, I'll probably be shot. Average money might get pushed this week. We might just move it to Thursday. I don't know. Guys, you're the best. You're the best. I love it. Diego, thanks for joining, man. Hopefully you'll join back. Guys, on your way out, please, if you did find some value, please, I ask you, just leave a thumbs up. Just leave a thumbs up on your way out. And tell your friends that we go live on Sunday. I'm not making any money on this. This is what I don't watch football, so this is my Sunday night football. All right, guys. Take it easy.